Welcome to Unfiltered and Unstoppable with Rob Romesburg. Real strategies for real advisors, a podcast that dives into what it takes to scale a thriving financial practice. Each week, we'll discuss actionable strategies, tools, and insights to keep you ahead in today's financial landscape. From innovative products and powerful marketing tactics, you'll get unfiltered truth and unstoppable strategies. Let's get started by building your unstoppable financial practice today.
Welcome back to another episode of Unfiltered and Unstoppable. I'm your host, Rob Romesburg. Today is a very special episode for me because I am joined by someone that I have known for more than 25 years, my good friend, Jared Anderson. Jared, welcome to the show, my friend.
Robbie, thanks for having me. I've been giving you a hard time about this for some time now. I can't wait to spread our lack of knowledge to your advisor base. This should be incredible, man. I'm really looking forward to it.
For those that are not familiar with my man Jared, Jared is the chief sales officer with Market Synergy Group, and the two of us have had a front row seat to some of the most significant transformations that our industry has ever experienced. We have definitely watched the annuity marketplace evolve. We watched the FMO space evolve. We've watched definitely technology transform how advisors serve clients. And most importantly, and I think this is going to be a great deal of what we cover today, we've watched the industry really move from primarily from just selling products to really helping people to retire with greater confidence. And so today, Jared and I are going to walk through the last 25 years and discuss what's changed, what's improved, why today retirees have more opportunities than ever before. And honestly, I actually might be a little scared of what direction we take today.
Oh, I can't wait.
So Jared, let's start here. What is a Market Synergy Group? What is it?
Yeah, so we've been in business now, Rob, since 2014. We do product development and distribution with multiple different insurance carriers. Ultimately, our goal is to work with, key partners such as Gradient. We've had the opportunity to know you guys from the very beginning, as Rob alluded to in the beginning. Our days go back almost 25 years prior to our time with the Lucius family. It was even at an insurance company locally here while we were interning and in college. So, but one of the things for me is about 13 years ago, we started Market Synergy Group with the thought process and idea of having product availability to a select few organizations that we work closely with and that we've established those 20 plus year relationships with. So our job is to design products for you all to offer to your advisors and give them something to sell that's incredibly competitive. And as you alluded to, I mean, think about the change, right? Back in early 2000s when we had 12 or 13 or maybe 15 different insurance companies, that number has changed dramatically over that time frame. The different product offerings that are out there and available, it's incredibly competitive, and that's great for the advisor and even better so for the consumer, right? If you think about 15 different insurance companies offering FIAs in early 2000s, and now there's 75 somewhere along those lines. I mean, I could even tell you within 10. I don't think we know the actual number because there's always so many new entrants. So that is most beneficial to the end consumer, which is ultimately why we're all here.
Yeah, you're exactly right. I say this all the time that the newer advisors and the newer individuals that come into Gradient, they would not recognize
Oh
where
my
you and
gosh.
I. It was just such a different world. Yeah, yes, limited carriers, yes, limited products, but definitely limited indexing options. I mean, we could barely spell S&P back then, and
Right. Right.
that's what we had. And talk about the technology. I mean, only paper applications,
Right.
that illustrations being mailed. Uh, it just, sometimes I laugh and respectfully when an advisor is complaining about some of waiting for a policy to take hours to issue. Well,
Right.
one of your carriers, it could take minutes, and
Yeah.
when it doesn't get issued within hours, it's like, man, you know, back in the day, we could wait a month before we knew that there was an outstanding issue with the paperwork.
Right. Everything was paper, right? Everything was mailed in or faxed in. I mean, I know we talked about that a little bit earlier. Uh, we started Market Synergy Group in 2014. We've never had a fax machine, right? But when you and I were doing this, that's how we would send out contracting paperwork to try and get a guy appointed with one of the 15 carriers. And then you'd sit by the fax machine and wait for a response, hoping that you hit your numbers or your goals for the day. And then from a technology standpoint, things have just gone crazy. As you alluded to, there's carriers out there, we're lucky enough to work with one, but there's carriers out there that are issuing policies within minutes. And the thought of that 20, 25 years ago, I mean, my goodness, it's just the way that we've evolved is incredible, and it's only getting better.
That's one of my favorite things when I'm talking to some of the new folks that come into Gradient is there was literally a line at the fax machine
Right.
waiting. And we actually had multiple fax machines. It wasn't like we
Right.
just had a fax machine, but that and by the way, when I first started at that FMO, I didn't even have email. I didn't even know what
Mhm.
email was,
Right.
and I learned about it when we just so it seems like a lifetime ago, but it wasn't that long ago.
It
But it
wasn't
was.
that long ago.
It's weird.
Yeah, it's
So
definitely crazy to think about it from that standpoint.
let me ask you this question, and it's an obvious one, but it's one that we definitely need to talk about. Why do you think, specifically in our arena, in our industry, why is competition so important? Why does it matter that there's 75 plus more carriers today?
Yeah, I mean, there's a couple different areas we can go with that. I mean, I think large private equity firms are starting to see that insurance is a profit. I mean, there's no secret. It's a profitable business, but it's
Mm,
profitable for everyone involved. It's a good product. And beyond that, it's consumer, right? The consumer want, the consumer need. You remember 20 years ago when we would talk to guys, or you mention it to your parents or your aunts or your uncles, or the demographic that we were going after. Annuity was kind of a bad word.
yeah,
And I think as an industry, we've done an incredible job over the last 20 years on educating both advisors as well as consumers that there's a great fit, within a portfolio of a client's retirement assets to have an annuity. And you talked about it earlier, Rob. Evolution of the advisor is probably the most important thing, in my opinion. When we were making 200 phone calls a day back in the early 2000s, it was to try and get a guy to sell an annuity. Now, when you're talking to one of your guys or gals or whoever it may be, the team of advisors that you're working with, they're doing a holistic plan for these people, right? That wasn't the case when we started. It was, hey, how can I get this specific individual to sell company XYZ annuity? Because that's how I'm compensated. And you think about 151A and all of the things that happened there, and probably a blessing for our
for
business, right?
sure.
Everyone started thinking about, man, I should be Series 65, or get my securities license in the event that this goes through. And ultimately what that did is it made them better planners, right? So now we have more people getting into this space. It's not, I'm an independent insurance agent. I'm a true financial advisor that
Sure.
does something for my client. And instead of capturing 20% of their assets by selling them an annuity, I'm going to take care of their entire plan.
Right.
And the evolution of the advisor is really what changed that. To your question, though, that's what brings more carriers in. It's like, oh
Yeah.
my gosh, now instead of, several tens of thousands of guys doing this, it's in the hundreds of thousands.
Yeah.
Because being independent, what you and I work with every single day, has become more and more popular. Again, going back to our early days, it was not uncommon for us to get like gosh, what's the term I'm looking for? The career guys on the line, a New York
Sure.
Life, a
Yeah.
Northwestern Mutual, something like that. No, no, no. I only sell my stuff. What we did as an organization back then in the early 2000s, as well as the other competition out there, is we let these guys realize that having a choice is really important. So then, to your point, more companies continue to launch products, giving your advisors the choice to pick, right? So now they have to be super competitive, what is consumer friendly, because you can go down the list of different carriers that are out there and available. And
Yeah.
as an independent advisor, you get a chance to pick to work with that specific company. And it's
Yeah.
been a crazy evolution. Like I said, probably 4 to 5 times as many companies out there offering products than when we first started.
Yeah, you're exactly right. The great thing out of all of it is the innovation, and
Yep.
with with that innovation, what has naturally happened right alongside that is better outcomes, which that those better outcomes directly relate to the retirees and having a better retirement experiences. A-
100%.
and so yeah, we have more carrier choices, but we also have better income options, better
Yep.
liquidity. That was one of my favorite things, going all the way back then. Oh, I would never put my money in an annuity because it's locked up.
Right.
Well, that was a 1990s thought process, and today more than ever they are so flexible
Right.
and more liquid than ever. And I would say now more than ever, our marketplace has become more consumer focused than any other product, financial product out there. That's my
Agreed.
humble opinion.
Yep.
Um, let's talk about so you and I we were at the same FMO back in 2002. And the reason why
Yep.
I remember that is because it was the anniversary of 9/11, and we took the whole company out front, and Gretchen sang the Star Spangled Banner at
Oh
the fire
gosh.
station. That's
Yeah.
how I remember that
Birds
to me started.
chirping, Gretchen just
Yeah,
calling everybody in.
that's
I
exactly
think we should relive that on this. Yeah, we got to get Gretchen back on here. What a fantastic voice she would have had then.
That's exactly right.
Oh my
Uh,
gosh.
so let's talk about FMOs, because I mean you want to talk about transformation from what we were back in 2002 compared to where an organization like Gradient is today. I mean, we were literally only product distributors back then.
That's it, man.
That's it. Today, now more than ever, FMOs are true business partners. Like, what one of the things when somebody asks me, like, "What is it that you do?" I don't even say annuities anymore when I tell
Right.
someone what I do. We are truly a consulting firm for the independent financial advisor. I mean, we're talking HR, technology, training, case design. I mean, so much more than ever. Like, isn't that crazy?
It's crazy. And I'll be honest with you. I'm not looking for a little pity party here, but it makes my job hard in a very positive
Sure.
way for you.
Sure.
Because what we did in 2002 is somebody would show up, we would have our morning meeting, Chuck would come in, everybody would get incredibly nervous, right? And we'd be like, oh gosh, please don't call on me type of thing, because we're
Right.
getting ready to talk product because we're getting ready to pitch a product for the next week.
Right. Right.
Nobody does that anymore. And that's fantastic for the advisor. What they do is, I'm going to help you set up your business and run your HR department. I'll help you with payroll. We're going to get you in front of clients. Product became secondary over time. And that's fantastic for the advisor, fantastic for the consumer. Part of that is because all the choices that are out there.
Sure.
You're right, dude. If you remember, I mean, our job was to call 200 people a day and try and tell them about a specific product, the product of the week, whatever the case may be. And the change from that, I mean, when was the last time you or anyone on your team recruited specifically on product? I mean, product is there and you want to give them updates when things change and stuff like that. But you're helping these guys create a business, right?
Yeah.
Not just be an insurance salesman. We're creating a business that has longevity, that you can put succession plans in place, pass it on to your children, sell it, whatever you choose to do. Whereas 20, 25 years ago is like, hey, let's go door to door and see if we can sell some of these insurance policies. It's so far from that it's crazy, and it's in a better way. I mean, we're in such a much better position now than what we were in early 2000s.
It is 100% from that independent advisor, not what product do you have, but how can you help me build a better business?
Correct, which is
And
awesome.
you touched on, you said succession planning. Like, I can't, and so like we've said a number of times now, we've been doing this so long that we've seen a number of our advisors age out.
Right.
I can't tell you how many of my advisors I've helped sell their business over the last 5 years.
Yeah. And
And
let me ask you a question. How
yeah,
many did you help sell in your first 5 years?
that never, that
Zero.
never happened. That
No.
because they, and I mean this with all kinds of sensitivity as I can. They died,
Yeah.
and what I mean by that, they never
Two things,
retired.
right?
It-
They
it-
died, they worked too long, or secondly, they may have said to you at that time, Rob, hey, help me sell my business. And your answer was probably, what am I going to sell? You got a
yeah,
bunch of insurance policies on the books. You
yeah,
don't have employees. You've been a one-man show this entire time. Nobody cares about you selling, 100 insurance policies over the last 5 years because there's
yeah,
no true value to that. And
Right.
what you all do at Gradient is help them build that business. Now, instead of selling a block of names from a bunch of insurance policies, you have the ability for a younger advisor, if your guys want to retire, to step in and take over a practice that you've helped build that can just continue to operate smoothly. And that was never the case when we first started, without a doubt.
You're right. And a lot of this, the industry and organizations like yours, you could take responsibility for this evolution, but also just in general, education in general has obviously with the internet and now with AI, that's
Yeah.
that was one of the main factors for this evolution because the average quote retiree is no longer average. They are
Right.
asking questions now to where that advisor better be on their A game. That
Correct.
advisor better truly understand how the portfolio works, how the outcomes really work, and,
Yep.
and no longer is that average retiree focused on account values. They're also focused now more than ever on values, and what I mean by that is freedom as a value,
Yep. Yep.
and confidence. Yes, they want income, yes, but they also the reason why they want that income is because they want experiences.
Right. They
And
want vacations. They want time with grandkids. They want to help pay for grandkids' colleges, all of the things. I mean, we're becoming a richer world, right? There's no
right,
there's no there's no doubt that retirees are, retiring younger with more wealth and they want to spend that. But
yeah,
to your point, they want to know that it's there. And we have the solutions and the tools in place. And you've, recruited a ton of fantastic advisors that are putting plans in place for these individuals. I used to say when we first started, advisors or agents sold policies. Now I think people buy them. They're bought, they're not sold. A consumer will sit down, and if your plan doesn't sound right for them, they're moving on to the next one. And credit to you guys for putting, the true business in place to where an advisor can actually walk through an entire portfolio plan and come out with results like you said. Okay, Mr. and Mrs. Client, this is, you have X amount of dollars, we're going to guarantee a certain percentage so you can live freely to cover your bills. Whereas before it's like, hey, we have this great product that has a nice bonus, it's going to give you a little bit of a head start, whatever the case may be. When we first started, there was no such thing as income riders. If you
right.
wanted income, you bought a
Forced
SPIA or something
annuitization.
along, or annuitize your product or something
Yeah.
like that. And then to your point, evolution of this industry said, wait a second, there's better ways to do this to where, clients can really get what they're looking for. And like I said, now people buy them. They're not sold. So
Yeah. We obviously know that the greatest fear for the average retiree is outliving their money. They
100%.
they built this great big nest egg. They're wondering, can I actually spend it? Did I save enough? Do I really want to enjoy it, or can I actually spoil my grandkids?
Right.
And so there was a study that you and I were going back and forth on that's actually pretty impressive. The retirees that have guaranteed incomes in place actually spend more confidently, more freely, with more enjoyment than retirees with larger investment accounts.
Yeah.
And I say that our industry is solely responsible for that. I'm going to take the. I think what we've done as an industry with income riders, because with an income that you can never ever outlive, that 100% creates confidence
Yep.
because people understand paychecks, right?
Yeah. That's exactly where I was going to go with this. 25, 30 years ago, you would retire with your nest egg and then you would try and figure out where to pick off, interest earned or something along those lines. If we generate a guaranteed income during retirement, that consumer just looks at it like their paycheck that they earned for the last 40 years. And they're like, okay, now I can spend X amount of dollars in any given year. And then I have the rest of my portfolio sitting off over here in the event of an emergency or a large purchase or anything that, that could potentially come up. So, I mean, think about it for you and I, what would Jess do if you went home and said, hey, I don't have a paycheck anymore, but I think, we'll figure this out because we got a little money saved up or whatever the case may be. What do you mean you don't have a paycheck, right? And I think these consumers think about it the exact same way.
Yeah, you're exactly right. And so I think there's a 60-40 split. And what I mean by that is 60% of retirees, when they see that income paycheck, they're like, you know what, that's great. Let's go and enjoy it. However, there are folks out there like my aunt and uncle. My aunt and uncle, I mean, they came from nothing. They made themselves, they saved every penny that they ever earned. They have
Hmm.
saved, I'm assuming, I've never seen their bank account, but our this is always our joke with them. We know that they are what is it? The golden Scrooge, the Scrooge McDuck. Like,
Yes, yes,
they've had every gold coin that they've ever earned, and they hesitate to spend money.
right.
Not because they can't afford to, but for whatever reason, psychologically, that they are afraid.
Yep,
They're afraid of running out. The market volatility, future uncertainty. They may or may not be addicts of Fox News. Who knows?
oh
and,
gosh.
and if they had an advisor that could just sit down with them and put together a real retirement income plan, that would overnight solve that emotional challenge.
Yeah. It's so funny that you say that because it made me think of something just as we're having this conversation. I think that's a generational thing, right?
100%.
And quite honestly, dude, we're coming into a generation that thinks differently,
Yep.
right? So after the boomers, the next generation, I can't keep track of all the generations. Maybe it's us. I mean, we are getting
It's
old, buddy.
us.
But we spend differently, right? More confidently. So
Yeah.
we talked about how things have changed over the last 20 years. I mean, imagine what it's going to look like in 20 years from now. And,
Yeah.
and that's why I'm, excited to be at a company where I'm at because we're at the forefront of that. And we use, Gradient and your team to try and come up with ideas and concepts to make these consumers, feel comfortable about their retirement. But to your point with your aunt and uncle, I mean, my mom, my in-laws, they're all the exact same way. My dad's a little crazier. He's a little wild.
Yeah.
He's not afraid to spend, and I gotta respect that out of him.
Right.
But I'll sit there and have a conversation with my mom or my in-laws, and I'll be like, guys, you are in such great financial condition. You
100%.
have no idea. It
Yeah.
is okay if you decide to splurge and buy a flight to go to Phoenix to see your old high school classmate. It's
Yeah.
going to cost you a few $100, and I know you feel like you don't have that, but you do. You let me
Right.
look through all of your stuff, and this is what I do every single day.
Yeah.
So generationally speaking, we're gonna have to change the way we look at things going
Yeah.
forward, and it's crazy. I just thought of that as you mentioned. That generation is super protective over their money, but creating these income riders has it's made them feel like they continue to
Yeah.
get a paycheck like they did for the last 40 years. So it's been huge, and that's why we see our business going from I was trying to think of this before we did this call. I think in 2002, 2003 timeframe, the overall FIA industry was probably just north of 10 billion. I don't know. So nobody check me on these numbers. That's probably pretty close to accurate.
I
Now
think
we're
that's right.
150, 160. I mean,
Yeah.
outrageous numbers. I
Yeah.
mean, so we're obviously doing something right, and consumers seem to enjoy it, and advisors seem to be figuring out a way to help those consumers. So
Yeah.
just the growth has been unbelievable.
And we talked about how it's a psychological thing. I remember one of my first job out of high school. I actually worked at a meat plant. My all-time favorite job, by the way. Freaking loved it. I was on the cleanup crew. Like,
Oh
I
my
mean,
gosh.
you want to talk about working with salt of the earth dudes, like these
Yeah.
guys. But no kidding, two things all they would talk about is the market and retirement.
Yeah.
That's it. They could not wait to retire. They couldn't wait. But psychologically, they never prepared themselves emotionally for retirement. They
Right.
didn't understand what to do after they retired. So they lived, like you already said, 40 years on a paycheck. Every 2 weeks, the money showed up. There was a system, there's predictability, that there was certainty, and then
Yep.
then all of a sudden, one day, congratulations, here's your nest egg. Now you have to become your own pension manager, in
Right.
essence.
Go figure out how to spend it. Right.
Go and man, no kidding, it would blow their minds, and it was just and I remember I was 18, 19 years old just thinking, "Man, that is not what I wanna do."
Right.
And this is why the retirement income conversation has become so important. This is why I believe annuities are more popular now than ever because it's not just about maximizing returns. That's what it was 20 years ago.
Yep.
Now it's about the advisor helping their clients to maximize their confidence
It's a
and
peace of mind, right?
peace of mind. Let's enjoy what you've worked the last 4 decades working for.
Right. And they didn't have that. To your point, my first job out of high school, I worked in the oil field.
Yeah,
Similar conversations, right? It's like,
yeah,
guys, it's hard work, man. And they were great people, great dudes.
yeah,
But at no point did they ever say, man, I can't wait to get to, I can't wait to get to my retirement nest egg so I have the ability to diversify and start creating an income stream for myself because they didn't know the difference. And now, because of what you all do as an organization and the many others that are out there, we have a bunch of independent advisors can help all those people. I mean, even 30 years ago, investing or having a financial advisor was kind of for the wealthy, if you think about it.
yeah,
Your everyday American, they were kind of on their own. You had pension plans in place, which are essentially gone at this point. And
mhm,
that kind of leads into, how we got to where we're at today with these income riders and these guaranteed income for life for these consumers, because there are no more pension plans, or at least, for anybody that started working in the last 20 years, you don't have a pension plan. You're kind of on your own. And that's where I think we kind of got to where we are today. And it's been phenomenal for these individuals. And like you said, it's giving them peace of mind and comfort to retire when they're ready.
right. I, from what I have seen with my experience, the greatest advisor that separates themselves, it's the one that is able to put together that plan and to be able to delicately present that plan to the individual to give them permission to
Hmm.
spend the assets once retirement arrives.
Yep.
And that's why I keep going back to it's no longer about just growing the assets. It's about making sure that they have the life that they've been working so hard for over these past 4 decades. And that's why that's a totally different conversation.
Yep.
And yeah, we got to answer those old school questions of when can I retire and you know how much can spend and all of that. But so why do you think that, overall performance conversations kind of performance conversations obviously there's a lot of great indexing strategies, especially within your product portfolio of the annuities that you guys put together. But why does why is it more income that provides that confidence, do you think?
I think it goes back to what we talked about earlier in the paycheck,
Yeah.
right? I
Uh-huh.
mean, it's you spend most of your working life trying to accumulate assets or accumulate retirement um, portfolios, however you want to refer to it. But once you get to that retirement, all you care about is what do I have to live off of, right? Can I
Mhm.
replace my paycheck as I retire? And obviously, it's incredibly important to continue to grow those assets. With what we provide, there's obviously the protection on the downside risks. So we have a different client set or a different mindset of clients, I would say. Obviously, our key demographic is either retirees or somebody who's getting close to retirement. So what I think happens is, there's frustration levels at the consumer point when they get a 5 or a 7% return when markets are up 15 or 20% because they're coming out of the market,
Right.
their 401k, their mutual funds, whatever they had been investing in throughout the retirement process, and they see a smaller credit. I think sometimes we forget to remind them that you have no downside risk, right?
Yeah.
You started with 100 grand as an example, and it's never going to be anything less than that. So if markets are up 20 and you get 6, you should be really happy with that, because 2 years from now, if markets are down 20, you don't lose any of that. And I think it's really hard for them to transition from, hey, I'm getting double digit returns in my mutual funds or 401k,
Yeah.
to, hey, I have this protection mechanism. But the reality is,
Yeah.
I'm trying to establish some sort of a paycheck, right? Through an income solution. And it takes a lot. It's hard for an advisor to kind of explain that to them.
Mhm.
I think the second thing I would add from an advisor standpoint is sometimes these guys have to be real direct with that client.
Yeah.
A consumer may say, hey, I need 10 grand a month in retirement. And you go through, as an advisor, you go through their entire portfolio, you create a fantastic plan for them. You got to have that hard conversation and say, and you get 75, or you work 3 more years.
Just had
and
one of
and
those
that's a
today.
hard conversation to have, right? But that's what, Gradient has created, this entire platform of business building, as you alluded to earlier, to where you can have those conversations with your clients and be confident about it, because we do have all the plans in place in order to get them to where they need to be. And you kind of have to be their coach, right?
Yeah.
I mean, you and I played sports growing up. We've talked about that for the last 30 years. Your coach wasn't always nice to you, right?
Yeah.
They're
Right.
going to tell you if you screwed up, or they're going to tell you if you're wrong. You got to either listen to them, or you're probably going to fail at whatever sport you're trying to play. Same applies to retirement.
Yeah.
These consumers are getting advisors because they're trusted. They know what they're talking about, and you all have helped them create a great plan for these consumers to ultimately end up getting to where they want to be, and that's their retirement stages.
Yeah. So let's go right hand turn here. We've
Oh,
talked
I
a lot
love
of
this.
we've talked a lot about income, and obviously that's a great deal of the planning that we've seen. But I I don't want to knock indexed annuities in regards to accumulation either.
Of
They are
course
one
not.
of the greatest accumulation tools that are available as well. Do you care to share with us anything exciting from on your side of things, of some unique opportunities on the accumulation side of things?
Oh, for sure. I mean, kind of, right? I'll leave it at that. Kind of.
Okay.
As
Okay.
as we talked about earlier, our company, we do product development, and in our mind, how can we put more into the consumer's pocket, right? And
Yes.
you make a great point. We've been spending most of our time talking about income, because that's what really drove our business to be 150, 160 million, whether people like it or not. I mean, when income riders started coming out, that's when our business started doing this, right?
Yes.
Um, but accumulation is there too, man. And we have a few concepts that we're coming out with this summer that has never been seen before,
Love it.
to where we're trying to tie in conceptually, how can we get more money into the consumer's pocket, right? One of the coolest things, that I get to do on a daily basis with our company is work with investment banks and insurance carriers and try and come up with options, um, in order to get more into the consumer's pocket, to wherever, listen, I'm going to be completely blunt, to where everyone's making money, right? This is
Mhm.
not a non-for-profit business. I mean,
Sure.
let's be very clear about that.
Right.
But there are ways in which we can give more back to the consumer. We have some really cool stuff coming out later this summer that will be helpful for that. And to your point, we talked about this earlier as well. They are great tools for accumulation with downside protection.
Love it.
So the hard conversations that I think a lot of these advisors have, you know, let's just be blunt, Rob. I mean, the vol control strategies that we see every single day have kind of gotten a knock over the last couple of years.
For sure.
And if we really think about it, it's only because the S&P has been doing this.
Right.
Those indexes have incredible components that work in different economic environments. And
Mhm.
quite frankly, I would say to every advisor on here, if you are allocating 100% to the S&P 500, you are doing a disservice to your client. It
Agree.
is not, I mean, who knows? I don't have a crystal ball. It's not going to continue. I don't think it's going to continue to move up, but you can get so much more upside potential with these indexes that we as organizations are creating, that are putting client at the forefront to try and figure out ways in which we can get more money into their pocket. And we got some really cool stuff coming out this summer. So we might have to revisit this and talk more in
That'd be
detail
awesome.
about some of that stuff. So
That would be great. That would be awesome. I want to talk a little bit about something that we have created to provide our advisors that are listening to this right now. So throughout today's conversation, we've obviously talked about the evolution of our industry and how it's gone from primarily only accumulation to helping create confidence and income and purpose throughout retirement. So for those that are listening today and you're wondering like how do I really get into those conversations and into greater detail? So this resource we put together is just simply called the Retirement Confidence Toolkit. And so inside of it, there's going to be a retirement income conversation guide, a retirement confidence questionnaire, and then 15 questions. This is one of my favorites. 15 questions every pre-retiree should be answering before retiring or before they think they can retire. And then we put together this awesome worksheet that's a spending worksheet for them to really see how much they can spend in retirement. And so all of this, you just head out to our website, which is simply evolvewithgradient.com/ignite team. So once again, evolvewithgradient.com/ignite team. So it's complimentary, retirement confidence toolkit. Start implementing this right away in your conversations. I promise it'll make a difference. So Jared, as I sit here and I think about everything we talked about today. I mean, it's obviously incredible, just these years and how much the industry has changed. And when we first started, there were significantly fewer carriers, fewer products, way less technology.
Right.
And, today, now than ever, more than ever, clients and advisors have more resources in front of them,
Yes.
more innovation, but that's also what makes it so exciting and so interesting, and the mission is still there. We want to still be able to provide the clients security and confidence to make sure that they know that they'll be okay, and we don't want them looking over their shoulder wondering, "Am I gonna run out of money?"
Yep.
But that's also what makes what we do so rewarding, and
Yep.
that's why our advisors that you and I love working with for so many years, why they do their job so well is because it's not about just helping manage assets. It's about the freedom we talked about and making sure that they enjoy what they've worked all these years to try to enjoy. So as we wrap up, it blows my mind how fast this goes.
Right.
As we said earlier, you specifically have had a front row seat to the evolution of this industry. You've specifically have helped products evolve, carriers evolve, FMOs even. Your
Yep.
organization has helped us evolve. So when you look at the next decade, I know you kind of touched on this a little bit for this summer. What do you think? What do you think is really going to be some of the greatest evolutions of our industry over the next
Oh
5 years?
man, what a great question. I think it's what we talked about, man. I think if we go back to 2002 when we started doing this together, we've already talked about this, but I'm going to kind of rehash and summarize our conversation. You and I were calling 200 people a day to try and tell them about uh, a product that just had a specific change that makes it a little bit more competitive, and now you should try and sell that. All the way to what you just talked about with Gradient and what you guys have to offer with these 15 questions to retirement. So over the last 20 years, we've gone from selling stuff to consumers buying it. The next 5 to 10 years is just going to continue to grow, in my opinion. Um, I think, gosh, I could be way wrong. I think we're starting to see a slowdown in entrance. I mean, we're pretty maximized, and it's really hard to get into this space as a new carrier. And as you're well aware, some of the top carriers have kind of set their, you know, put themselves in a position to where they're going to continue to be incredibly aggressive in how they price and how they do products. And we'll start to see maybe a slowdown as far as entrants go, but the innovation is, I mean, it's crazy, man. If I could, let you sit in here for 3 days with some of the things that we're talking about conceptually that we've never seen before,
Yeah,
this is all built around what you all say to us, what the advisor says to us, what the consumer says to us. And our whole job here at Market Synergy Group is to give you something that's consumer friendly that agents love to talk about. And the evolution, even the stuff that I talked about that'll come out later this summer, is stuff that we've never seen before that is so consumer friendly. And um, that doesn't change, man. I mean, just think about what cell phone did you have in 2002 when we started?
I don't think I had a cell phone yet.
I think I had one that plugged into the cigarette lighter in
Yeah,
my car, maybe,
yeah, yeah,
right? And you think
yeah,
about the evolution of the world in the financial services industry. Quite frankly, man, we've been a little behind the rest of the world's technology, but
yeah,
things are changing,
for
right?
sure.
As you mentioned, think about AI and all the things that we can do with AI. I mean, some of these carriers that we're working with, I mean, we talked about applications being submitted in minutes. Think about under a minute,
Yeah,
right? I mean, there's things that we are working on and things that can be done for the consumer in addition to the next generation, right? Who's a little bit
yeah,
more advanced from a technology standpoint, right? We
for
just
sure.
mentioned that neither one of us even had cell phones when we started.
Right.
Um, so technology advances, AI is massive, in my opinion. It's going to play a huge part in how we see this business evolve. And then the other thing I'd add is kind of this 10-year evolution of cryptocurrency, right?
For
I mean,
sure.
we have a couple different things, and I'm not here to do commercials, but we're seeing multiple indexes come out with cryptocurrency, right?
Mhm.
And an interesting stat that I'll share with you around that: 80% of millennials own some sort of cryptocurrency, whereas 4% of boomers do. And in my
Wild.
opinion, boomers don't own it because they don't know what it is, right?
For sure.
But if we can, as an industry, create some sort of an insurance wrapper that allows them the opportunity to participate in Bitcoin in a meaningful way that also protects them because they're at their retirement stages, it's going to be really cool. And I think we'll see a lot of that coming out here in the future as well. But again, it's just evolution, man. And there's companies like mine sitting around every single day trying to figure out ways to make your life easier and the rest of the team at Gradient's life easier, which ultimately, it trickles down. It makes the advisor's life easier, and then it's better for the consumer. So that's what we focus on, is how can we put more money into the consumer's pocket? And we got a lot of great things that we've been working on.
That's awesome, man. That's awesome. Well, but before I wrap this thing up, I wanted to give you the opportunity to let everyone know about my phenomenal assist to turnover ratio. You didn't bring that up once.
Actually, I did not bring that up, but I think if we're going to be honest, we got to reverse it. It's got to be turnover to assist because the bigger number goes first. For those of you listening, Rob played a lot of City League basketball years ago, probably pounds ago for both of us as well. But at this point, both of us are fully retired. Me after I broke my elbow. You remember that when I broke my elbow? Yes. Oh my gosh, that was terrible. But we'll call it the turnover to assist ratio. Rob got a little bit aggressive on his passing, so we just won't bring any more of that up.
I would say that's accurate.
Now it's fun because we get to watch our kids do it. Instead of getting out on the court and getting out on the court ourselves. I get tired watching them run, so I can't imagine what it would be like now. But
that's a fact.
And not only were we selling annuities back then, we were playing multiple nights of City League basketball, which just makes me tired thinking about it.
Minimum of 5 nights a week.
I know. It's
well, hey man, seriously, thanks for taking your time.
Of course, buddy.
Really appreciate that. And without a doubt, appreciate your friendship over the last 25 years, man. It's been incredible to watch your organization grow.
Thank you.
Right alongside ours. It's been a blast. And, as we continue to say, that the whole purpose of this is not only to help our advisors grow, but more importantly, serve their clients at a higher level. And so with that being said, to everyone that's listening to today, every advisor, thank you. I always like to close out each podcast with a thank you because you don't hear it enough.
Right.
Thank you for serving your communities. Thank you for helping families navigate retirement. Thank you for, being there in more than likely the worst times of people's lives. You're there during the passing of a spouse or a child. And so the work you do matters. And for those that are listening, if you found value in the podcast today, be sure to like the episode, follow the podcast, subscribe, share it with your team, share it with your firm, because you want to make sure that we continue to evolve this industry. Until next time, stay focused, stay intentional, and as always, stay unfiltered and unstoppable. Thanks again, Jared.
Thanks, buddy.
The opinions herein may be from personal experience and may not necessarily be those of the Gradient Financial Group, its employees, or affiliates. Any results, topics, or outcomes are for informational purposes only. Financial professional use only. Rob Romesburg does not render tax, legal, or accounting advice and is not affiliated with or endorsed by the Social Security Administration or any government agency.